Hi, I'm Rachael Damian. We are here today with Blase with DHA Financial.
Hi there.
And Blase, you're going to chat with us about some of the common misconceptions about reverse mortgages.
Sure.
So, first off, what is a reverse mortgage?
So a reverse mortgage is a unique product that was put together by FHA, Federal Housing Administration, for people who are over 62 years old, that would allow them to stay in their home and not have to make a monthly payment. They still have to pay their taxes and insurance, but they don't have to pay a mortgage payment as long as they have enough equity in their home to be able to cover that. So the way it works is you'd have to have about 50% loan to value, or 50%. You'd have to have had your house paid off at least about halfway, and then you wouldn't have to make any monthly payments for your whole life, and the house, you get to still live in the house, which is great.
It is great. One of the misconceptions is so at the end of the day, the bank owns the house, but that's not necessarily true.
That's not true. So you still own the house. So the thing that's happening is that a little bit of the equity every month is paying an interest payment. So they allocate, it's like a line of credit, and they'll allocate a certain amount of the interest to be paid out of the equity in the house off of that line of credit. But you still own the house. So a house that's going up in value, for instance, in our market right now, houses are going up 10 to 15%. The amount of interest that you pay through the course of a year is usually only about 5 to 7%, depending upon the interest rate of the going rate. Okay, so when you look at that, you're still building equity, but if it goes up at 10% or 15%, and you still own that house. Now, as long as you live in the house, you're able to stay there and you don't have to pay any payments. But if you move, if you sell the house, you would get the remaining equity that's in the house, and you would pay off the existing loan.
Okay.
The loan does go up a little bit every year, and actually every month it goes up just a little bit because that interest is charged against the house.
Okay.
But the difference is still your equity, and when you pass, your heirs have 6 months to be able to sell the property, and they would get whatever equity is left over. Typically what we see is, for most people, the equity that they get is about where they start, or a little bit more, because if it's going up at 15% and you're only using 5 or 6%, then you're still gaining equity. That equity can be transferred to your heirs. Okay? So they have 6 months to either refinance the property or sell the house.
Okay.
That's how it
So
works.
basically, the equity, as you said, is being used to pay down the interest while you remain in the house and not have to worry about that huge mortgage payment.
Yeah.
Okay.
So, and this literally changes people's lives.
Yeah.
So for a lot of people, when you retire, you have a fixed income.
Mm-hmm.
So you got Social Security, maybe a pension. Maybe you make $5,000 a month. Well, if you're paying a $2,500 a month payment,
That's half.
that's half of your retirement income. So now you have $2,500 to live on. Now usually of that $2,500 payment, your tax and insurance are about $500 of that. But there's $2,000 a month that's going towards the principal and interest on your house.
Yeah.
So what this does is allows people to not have to worry about that. So your disposable income increases dramatically, and for some people it allows them to stay in their house where they couldn't otherwise, and allows them to retire and be comfortable and know that their house is secure, and you never have to worry about making that payment. You do have to make sure you just put a little money aside every month for the taxes and insurance, that $500. So you always want to set up a savings account so that when they come due, you can pay those payments.
All right.
Yeah.
Awesome.
The other nice thing is for some people too, if they have a lot of equity in their house. So a lot of people have worked all their life and they have either paid off their house, or they have, if they haven't paid it off, they may owe $100,000 on a, let's say, $600,000 house. Well, they have $500,000 of equity in there. Well, they don't have access to it without increasing their monthly payment.
Mm-hmm.
So with a reverse mortgage, what can happen is, let's say you only owed $100,000. Well, if your household was 6, you could borrow $300,000. So we'd give you $200,000 that would be available as a line of credit. And the way they work that is that your first initial draw, you get about 150,000 or 200,000, and then you'd have another 100,000 the next year. So they don't give it all to you all at once.
Yeah.
But at least you have that available to you, and you can draw up to half of the equity that's in the house, and it gives people money they can go invest. Which is, for a lot of people, that can create another source of income for them, because they have that money they can go invest, and they don't have to make that monthly payment.
Awesome.
So not having to do that, but they have to stay living in the house, and it isn't an investment property vehicle. It's only for owner-occupied people
Okay.
that live in the house.
Great. Well, thank you so much for sharing.
Yeah,
I appreciate
no problem.
that. And
Yeah.
hopefully that will clear up a lot of the misconceptions that there are about reverse mortgages.
Well, and that's the thing is that a lot of times people are worried, well, I want to leave something to my kids. Well,
Yeah.
you're still going to leave whatever equity you started with is about going to stay the same.
Yeah.
So that's usually about what it works out. So, and then there's other vehicles too. So like if they wanted to have more equity to them, they could do the reverse mortgage and take out a $100,000 life insurance policy, right? So, but now they don't have to make any payments. So the mortgage payment was $2,000. The life insurance policy is $200.
Yeah.
And they could give that money to the kids still if they wanted to give them more equity.
Yeah.
You know, so that's always available, but it still allows people to have more use of their money.
Nice.
And so this is a really great vehicle, and we're pretty excited about being able to offer that here at DHA.
Awesome. Blase, if people want to get a hold of you, how do they get a hold of you?
The easiest way is just to give me a call. My phone number here is 303-755-75. What's my number? All of a sudden I forgot my own number. Yeah, here it is. 303-578. I'm sorry. 303-578-7810. Or they can email me. And that's a great way. And my email address is bderoco, so BDEROCO at DHAloan.com.
Okay.
DHAloan.com.
Great.
That's
Thank you
it.
so much.
Thanks so much.
And thanks again for your time.
Yeah, no problem.